Hi everybody, this is Rolf Garcia Galant from Shoeboxed, and I'm here with Kyle Durand. Kyle is a tax attorney who runs a business law, tax, and accounting practice out of Redmond, Washington. But in his everyday practice, he constantly educates business owners on how to protect themselves and their businesses from an audit while also saving money on taxes. So Kyle agreed to do a little interview with us here, answer a few questions that we hear a lot from our customers. So thanks a lot, Kyle, for joining us.
Hey, it's my pleasure. Thanks for having me, Rolf.
So we talk to business owners all the time here at Shoeboxed, and usually they call us when they have a problem. Hearing from the experts, what are the main tax and accounting challenges that you find that your small business clients struggle with?
You know, it's funny. I regularly hear from my clients when they have a problem as well. So there's no difference there. And when I do hear from the clients, it's usually because they haven't been tracking their finances correctly. So they have no idea what their income is really and what their expenses are. So it boils down to, like, most of the problems I see when clients come into my office for help, either for tax law or for accounting help, is that they haven't been keeping consistent records, so they have no idea where their business is. And that's a theme that I continually emphasize with them is just keeping good records keeps your business healthy. It's one of those fundamental things.
Right, it's not just a tax problem, it's also just knowing where your money is and how your business is doing on any given day.
Absolutely.
So what's the quickest way that a small business can prepare for tax season now that it's upon us?
Yeah, so it is. It's not too far away right now. And there are a lot of people asking that question, like, oh my gosh, I haven't done anything. I need to file my taxes, on April 17th this year. And it's not too late now. It's just that you need to get your records together. And by your records, I mean any of your income records, any of your expense records, and get them into a format where you can easily sort the data and sort the information, or that your accountant can do that for you. So at Tax Receipts, we have what we call a first aid guide, a tax first aid guide. And we give people a quick and dirty plan for getting all this information together and what to do with it when you get it together. And essentially, what we recommend is that the people go and get all of their expense records and send them to Shoeboxed, because Shoeboxed does all that dirty work for you. As someone who runs an accounting firm, I regularly have people come in and give me a big pile of receipts, and it's just a mess. And that's how I found Shoeboxed a couple years ago. Was I was just going out of my mind trying to pick through all these pieces of paper for these clients, and generally they would do it at this time of the year too, a couple days before tax season. So now what I'd recommend people do is take all those expenses, give them to you guys to get them into a single format that they can then bring to me to prepare their taxes.
So you don't like shoebox clients? People that just bring you a shoebox full of receipts and say deal with it?
Yes, absolutely not. Absolutely not. That was a significant pain point for me a couple years ago.
Well, good. So let's say I already filed, everything's submitted. One thing that people get nervous about with taxes is audits, obviously.
Yes.
And correct me if I'm wrong, but I think small businesses are at some of the highest risk of being audited by the IRS. So what are the common IRS audit triggers in general that our customers and your clients should be watching out for?
So you're absolutely right that small businesses are audited much more frequently than the average wage earner. In fact, there was a report that came out last year from the IRS, and in 2010, Schedule C filers, which are self-employed filers, were up to 940% more likely to be audited than those with simply a W-2. So it's not something to take lightly when you're looking at almost 1,000% more likely to be audited. So a trigger for being audited is actually just filing a Schedule C. So for being self-employed, I mean, you're much more likely to be audited. Unfortunately, that's the case. Another trigger, which is seems kind of ridiculous, is math errors. So last year, math errors on tax returns cost taxpayers over $334 million just from the errors in
carrying a zero or
exactly. So making errors on their returns cost them $334 million in penalties alone. That's not to say any extra tax that was assessed after they were audited. So that's another thing to watch out for. Make sure when you file that tax return, or that your accountant files that tax return, that everything looks good on it. You go over it very carefully. Another audit trigger for small businesses and self-employed people are unusually high meal and entertainment expenses when compared to your income. Now there are some areas of small business where they're expected to have higher meals and entertainment. So lobbyists, for instance, they generally have higher, but that is one of those triggers that will they'll ping the IRS computers to have an auditor look at your record. So you want to make the most out of your expenses and your deductions, but it's like that old saying goes, that the pigs get fat and hogs get slaughtered. You need to be careful when you do that, because it's certainly true here.
So let's say the unpleasant happens, and that computer just catches your zero that you didn't carry, or it seems like you have too many meals and entertainment expenses. They knock on the door. What is a small business owner's best defense in case of an audit if it does end up happening?
I think first, stop, catch your breath, because anytime the IRS sends you a letter or literally knocks on your door, it's going to make your blood pressure go through the roof. But take a step back and relax. Call your tax advisor next, and then the best defense you can have against an audit, hands down, is good records. The IRS for the 2010 tax season, the IRS assessed nearly $45 billion in additional tax and $28 billion in penalties as the result of audits. So it really pays to have your records in place and intact throughout the year. And my experience as a tax attorney has shown that those clients who consistently keep their records clean and consistently keep them on a systemized practice, keeping them squared away, they generally walk away from these audits in fairly good shape, fairly unscathed. In fact, there was an IRS report also that came out that said that business owners that made over $1 million in a year last year, or in a year, were 60% more likely to walk away from an audit unscathed. And it's not because they have more money. It's because they've probably they've spent a little time and money to put in the right systems to get the good records in place. So the goal for, I think the goal for any taxpayer, whether you're a business or an individual, is to keep an accurate and complete record of your income expenses throughout the year.
That makes sense. And the good thing is, for anybody who's watching this video, is you don't have to be in the millions of dollars to be able to afford something like Shoeboxed.
Absolutely.
Where for $30 a month, you can send us all your documents, and once they're in Shoeboxed, they're always there. You can search them, so if you know that you're looking for a receipt that has a certain brand on it or a certain item, you can search by that item and that receipt will pop right up. And it makes the IRS's life easier too, and I'm sure they appreciate that.
Oh, they do. In fact, I have a story about, I was representing a client last year, and I started using Shoeboxed a couple years ago in my practice because of all the receipt problems and the record keeping problems. But we were at an audit, and the IRS auditor asked for a receipt. And this was my first Shoeboxed client that had been audited. And we just sat there, just pulled it right up on Shoeboxed, turned the computer around, and showed it to her. She's like, "Okay, check, on to the next one." I almost jumped for joy when that happened. It was delightful.
That's great to hear. Okay, so of course you want to play good defense when it comes to an audit, but what about offense? What about deductions? are there any common mistakes that you see that business owners make that where they end up overpaying on taxes? I mean, I know you get it back if you ask for it back if you've overpaid, but what can we do proactively to avoid overpaying the IRS?
Well, I think that it goes, first we should start off with what the definition of a deduction is. A deduction, the definition of a deduction is an ordinary and necessary expense incurred by your business, and it's recognized by U.S. tax law as reducing your taxable income. So, at tax receipts, we call this the plus-minus game. So your sources of income are the pluses, and your deductions are the minuses. So the more deductions you miss, the fewer minuses you have, and the more income tax you pay. So getting back to your question as to what the common mistakes are, again, I think it goes back to poor record keeping. And I know I'm sounding like a broken record here, but there's a very good reason for this, because if you're not tracking your expenses as they occur and doing it systematically, I guarantee that you're missing deductions. And by missing those deductions, you have those fewer minuses and more taxable income. So, for instance, you and I just returned from South by Southwest in Austin. Think about all the expenses that we both incurred there. We have airfare, lodging, food, transportation, conference fees, et cetera, et cetera. It goes on and on. And those expenses add up quickly, and they add up to a pretty decent amount. And if you're like most people and you forget to get a receipt, or you do get a receipt but you stick it in your pocket, or you go back to your hotel room and you stick it in your suitcase, and one goes in your briefcase, and soon they're all over the place and they're lost, just by not tracking those expenses, those receipts right then and there, you're losing money and you're paying more in taxes because of it.
And I'm sure this is an assumption on my side, but I'm sure that from January till March, people probably keep a lot better track of their expenses because taxes are on top of mind. But I'm sure, starting in May, a lot of people don't keep all of their receipts, etc. So come January, they probably just have the last few months of their expenses, and all of those expenses that were right after taxes when it's really not on your top of mind anymore are just lost forever if you didn't keep track of them right there and then.
Yes, absolutely. Absolutely. And just by doing a few things to systematically keep track of them, you save money year round.
Great. So just to end, Kyle, and if there's anything else that you want to touch on, I'm more than happy to get to that as well. But what are some major tax myths that small business owners should be aware of? Because right now, everybody's getting advice from everybody, and not everybody is licensed to give such advice. So what are some tax myths that our small business users should be aware of?
Well, the number one myth that I'm constantly busting is that people think that my credit card statement is good enough to justify a deduction. And I'm sorry to say that the credit card statement alone is not. And I encounter clients on a daily basis who still believe that. But the credit card all the credit card statement does is show that you spent money on something and where you spent it. It doesn't show that you spent something. It doesn't show what you spent the money on and how that is a valid business deduction. So that's why keeping the receipts is crucial for not only making sure you're saving money systematically, but so like that client in the audit that I mentioned, that he can actually, or that you can actually pull up that receipt and say, all right, here's the credit card statement. I spent this money. Here's the receipt. I spent the money on this item. So.
Right. The example I always give when I talk to people that say that too, because they say, why should I use Shoeboxed if I have my credit card feeds and it's all online? So, well, there it'll show up that you spent $50 at the Shell gas station, but it doesn't say if you spent it on fuel, which would be probably deductible, or if you spent it on beef jerky and beer, which would probably not be deductible. So right there with you, we hear that a lot here, credit card statements, but receipts are not going anywhere.
Nope.
Anytime soon, and that's why using something like Shoeboxed and actually having your tax advisor bust that myth it's a great thing.
Yeah, no, that's a big one. And you get to another myth that I also get is, you bring up the tax advisor is, I don't need to know about taxes or that accounting stuff. My accountant takes care of all that. And that is another one that's, when you think about it, your accountant's effectiveness is only as good as the records you give to that accountant. So if those records are not being kept up to date, the information is not going to be good for that accountant to prepare your tax returns, and not just your tax returns on an annual basis, but your quarterly returns. And also, you don't, again, to go back to our very first point, you have no idea where your business is from a profit and loss standpoint if you're not keeping those good records. So it pays to know a little bit, to get a little bit of knowledge, and then systemize some of this stuff also.
Well, great. I'm sure that you have a lot more advice to give, and I'm aware that you have a strong web presence. So anybody who looks up on Google Kyle Durand, I'm really bad with pronouncing.
Yeah.
We'll probably find numerous other things that are interesting to them. And we really appreciate, Kyle, that you took the time to stop by. And we hope that you have a busy but not too stressful tax season.
Oh, thanks, Rolf, and thanks for having me. I appreciate it.